So we're gonna keep it short and sweet today. So an hour. So usually the markets are really derived by kind of like two to three things. Usually markets goes up, whether they go up or down, it usually derived by the earnings of the company. So if you go through the guidance every single day, you kind of will be able to tell, oh, okay, um, you know, this is what I think about the market. If do we have a lot of companies dropping their earning guidance, or do we have a lot of companies beating their earning guidance? That's the first part. Really drive what happens if the market is going to go up or no. So if you've been reading a lot of earning guidance, you kind of have a feeling of what's going to happen. If you don't find any companies that you can show and stuff like that, your earning guidance is not really decreased by 10%, then you'll be like, wow, what's going on? Yeah, so usually market comes down really when you have see a decrease of earning guidance. And that's what usually has been pushing the market big time, as well as interest rate. So when the interest rate comes down, the stock market will normally start going up as well. Now, recently we have something that's incredible, where now we have literally even the man himself, the Trump has been actually what's that called? Affecting the market big time recently. Yeah. A lot of the up and down of the market is actually being derived by Trump big time. The whole crash here is actually caused by him. Say, you know what, come in and he said, you know what? We are gonna increase tariffs big time for a lot of these countries, you know, scaring a lot of people coming back down. And then when we are at the bottom, he said, you know what? We're just scaring you. And things becomes normal again. And yeah, he just you know what? This is this is without a deal, and this is when he says there's some deal going on. And then the same thing happened here. There's a crash coming in there. That's also also caused by him saying something like, what did he say exactly? I think he said, he tweeted out and said that, you know what? The you what market? The China market has been they're trying to come up with a restriction to stop the rare earth. Yeah, to stop those thingy. So when that happened, the market kind of fall a little bit. And he's like, what's the market falling? And then on Sunday, he literally tweeted everything on Friday when the market closed. And then no one can actually do anything. And on Monday, he's literally say, you know what, guys, we are still meeting with President Xi and stuff like that. Today the market was actually down, was actually up, and then it suddenly go down again. Around 2 o'clock, went down when he says that we might not meet President Xi, and then it went down again. Yeah, but the good news is a lot of these are just noise because this thingy coming down is actually less than 2%, and no one can actually do anything about it because it's actually after Friday. So yeah, it comes down like that, and. So it's just been going sideways. These are just 1 to 2%, which is not a very, very big drop. If you want to know historically what kind of drop the market will actually do for you, this is actually what the markets usually do historically. Yeah, this is actually what the markets usually do historically. I think it's a very, very good picture. So you probably want to take a screenshot of this. Um, it's actually tell you intra-year, in the whole year, what do you think the market is going to drop before it starts coming back down, start going back up really nicely. This is from JP Morgan. So you can see when we have just look at the biggest one that we got. If we go to one of the biggest one in history that we have, this is 2008. We actually have a downturn of negative 49%. That's 2008. Yeah. And that's when the market goes down really, really hugely. But before that, we have this Corona down. This is in negative 34 percent. It went down. This is during Corona. And we have another 34 here. This is negative 34. I think this is 87. This is Black Monday, if you remember. Yeah, this is Black Monday. So where there's a circuit breaks and stuff like that. So this is like a Monday, Black Friday or Black Monday, one of these. Yeah, went down massively. And then we have this 34, 30 like that. This is the internet bubble. So in 2000, they didn't say the year properly, but yeah, it should be internet bubble in 2000s as well. So that's kind of what happened. And recently we have this negative 19%. This is on tariffs. So you can see on average, the market actually went down around this kind of level. So you kind of get ready of, you kind of expect this type of discount. The discount that we have just a few days ago is literally just 1 to 2% kind of discount, which is really negligible. Yeah. So that's what we have here. So you can negative 18, 19. This is what kind of average kind of discount that what we have on our market. Yeah. But if you really, really want to be very frugal in terms of the discount, that it will still be around these kind of levels as well, around negative 8, 9, 10, and stuff like that. Yeah, just around there. So minimum wise, you want to expect around 8, 7 kind of percent to start deploying some of your cash, etc. Yeah. So this is just to say that every year, um, when in if you expect market crash, what kind of crash you can expect? A lot of people they expect market to crash to zero. When they think market crash is going to crash to zero, it's not going to crash to zero. You want to see what is the average crash. The average crash, if it comes down, it will be around 8% to 7%. That's kind of what we usually have. A very, very big thing will be 19. If you got 19, you want to be like, wow. You want to be like, I'm really lucky. If you go more than 20, 28, 30, historically, we never have seen it before. So you want to be like, sell something and go all in. Yeah. So that's kind of what happened. But you don't need a lot of big capital anyway. You can use very, very small and you can go all in as well. Yeah. Using some leverage. Cool. So that's kind of what happened. And so you got a average mindset of, okay, next time when it comes, what usually you are expecting. Yeah. Because usually people think bottom will keep going bottom and never comes down. You know, it's like, you know, bottomless meal. It's not really like that. Yeah, there's a cap to it usually. Okay, so that's kind of what happened. Even though we have lots of tools to help you as well. Cool. So that's kind of what happened, and we are also at the time where seasonality wise, historically. Let's have a look. What is this flow of funds seasonality? So this is a little bit more date that we see. It's not 100%, but it is what usually kind of it looks like. So we are kind of October 21st, kind of around here. So you usually we have kind of a little bit of a pullback kind of going on just right there. Now let's go back to our SP a little bit. So yeah, so that's kind of what happened. This is our SP 500. So we are gonna open the Bollinger, but let's remove a little bit. So you will see right now things keeps going higher and higher. People think that things will never come down. Same thing with gold. People used to think that gold used to go higher and higher and it never come down. So if you look at it carefully, gold is like going higher and higher, it never comes down. And when it actually comes down, things actually comes down quite a lot. Goals in the past 10 years has never come down to more than 6%. Today it went up to 5%. Yeah, this is the largest drop it has ever seen since 2013. So if I show you some graphs a little bit, oops. It show you that we actually don't have to chase things because things is gonna come down to your way eventually. So this is from 200 moving day average. The moving day average is kind of this line. So you see that every time it's kind of above there a little bit, above there a little bit, above there a little bit, above there a little bit. So when it's too stretched out, a lot of people are trying to, buy the top and stuff like that, trying to buy the top. But when the kind of things kind of happen, usually we have a pullback kind of going on. That's kind of what we see when you think that things is gonna keep going higher and higher, like the world has never seen before. And we actually have a pictures where you can see people just queuing in the gold shop trying to buy gold right now. when gold is at all-time high. And as a result of that, gold actually dropped down a little bit today. Cool. So that's kind of what happened. So it's to show you that really stay on target and being patient is really, really important. As we talk about the other days as well, if you go to volatility index, so it's true we've got a spike here. This is just on Friday. This is actually one of the biggest spike scenes sometime. But the real spike that what we want to have, the volatility index, you kind of want it to go a little bit kind of like higher than that. So if you look at the spike that we used to have, which is here, this is like 17th of October. Okay, so the other day was 17, so 17 January. So 17th October, I think we have another drop on the 17th of October, if you remember. The drop is due to the banking system. Yes, there's a banking system drop. So this is kind of like Tuesday, we have a banking system drop on Friday. There are two companies, loans, you know, started to go a little bit haywire. People has been trying to invest too much into these AI stocks, yeah, something like that. So it's the same thing with internet bubble, where a lot of people are getting into the internet. They've been hyping their earnings big time. CapEx, they've been putting a lot of money into these technology stocks to the point where it becomes a bubble. Same thing with real estate. People trying to stretch themselves into real estate and it becomes a bubble. And AI eventually is going to happen where no matter when we have a big technology happen, these sort of things usually happens as well. Yeah. Like big technology, like big innovation. People stretch themselves too thinly. And that's kind of usually kind of what happened. Yeah. So that's kind of where let's go back to volatility index a little bit. So if we're gonna defense both things together, so let's have a look real quick. So on Friday we have a big spike. On Friday, actually, we have a big spike of volatility index continue to spike even higher than where we were on Tuesday last week. We were around here. We were talking about this spike is quite small. We used to be here last week. We were talking about this spike is actually quite small. So the whole week was actually quite down until on Friday. There's companies, the bank companies spike up a little bit. So they spike up a little bit just there. So now we have to study this spike now to see if this spike means anything to us on Friday. Okay. On Friday, there's a big spike going on to the market. So let's see if this spike means anything to us. So we're gonna back test this spike a little bit using volatile. So this is a spike that we see on Friday. So obviously the spike that we saw on Tuesday is quite fine. The Tuesday spike that we saw. I mean the last Tuesday where we have so far is kind of okay. The Friday before is when the Trump talked about rare earth. The spike was quite okay, and then we have a proper spike on Friday just 2 days ago, and today is Tuesday, so we are quite recent to that. So let's study that spike right now to see if there's anything that what does that mean for us for that spike. So we got this spike. This spike is actually one of the highest spike. I'm going to remove the spike that we have. So the spike that we have before, like when we discuss on Tuesday, we kind of happen all the time. So that's okay. This is okay. This is 9th of March. This is 19th of December. Okay, let's just remove that. And let's study this spike a little bit. Because volatility index is studies for those who are new. It shows you how panic people are. Okay? It shows you how panic people are. So we like to study these things so that you kind of know when people are getting really panicked, not usually that can be a sign for reversal. Okay? So we want to see if this panic is strong enough or not. The panic that we have on April is where the big Trump tariff panic going on. So obviously the goal will be to have this here, this thing going on. That will be really, really good. But sometimes we have a small spike going on here. So you can see usually when we have a panic like that going on, I'm going to change to weekly chart for you. If you see really carefully a little bit, yeah, these three kind of spike that we have here, the big spike on the volatility index here, you can see this is the April one, which we have is the bottom of the market. This is August last year. It's also kind of the bottom of the market for around 2 months, August, September, August, it went up and then it goes sideways, and then there's a crash going on in February. You guys know that. And this is the March, is also the bottom of the market. So if it comes to around the 28, I would say just be around even 27 is kind of quite good. You kind of want to write it down here. Yeah. When this volatility index again around 27 is actually quite a good thing. It is kind of like a small bottom going on. Yeah, that means adding a little bit of positions is kind of quite fine. Now, what we have right now is we have this spike on Friday, just like a few days ago. It's a banking spike where there are some regional companies, regional banks in the US showing some kind of things like that. So let's have a look on that spike to see if that could be our bottoms as well. Okay, let's have a look real quick. So how do we know that? So that's where we were. This is the green. You see that every time we have a green, this is 10th of March. This is kind of a small bottom. It's not a 10th of March. We do have a 10th of March bottom, if you remember. Let me show you 10th of March later on. This is kind of like a small bottom before it continues to go lower. So if I use US 500, we have a 10th of March bottom just right. Yep, just right there. We have a pullback, so you can expect things like that to happen right now. When the volatility index is the same as 10th of March, this is just 6 months ago. It really comes back here for a few for pullback a little bit before it deep down a little bit nicer there. Okay, so that's the first that we saw, volatility index. And that's the first one that we saw. And then the second one that we kind of see. So this is 10th of March. A little bit here, not really. And then we have there, we saw that 4th of August is actually a bottom there. What else do we have? Let's see. Okay, the rest is not so clear cut anymore. This is actually also a little bit of a bottom. This is December. This is not really a spike. So yeah, we don't really have a lot of data to backtest. So we just literally have just one, and the last one that we have is just in in March time. You saw that it pulls back a little bit before it comes back down a little bit. Yeah, so this is just to study a little bit of volatility index. Yeah, you can see the right now it's also pulling back quite quickly there. When it pulls back quickly, it's normally when the market will have a coming down a little bit just then. Okay, so let's come back here to our SP 500, really apply everything on week 2 training. So you saw we draw a trend line, an uptrend like that. It's just to show that the really, really good time where you're almost gonna guarantee to make money when it comes back to our this support line here, our this uptrend. You want to have a lot of touches just like that. And then you draw a support line. The fastest support that we have is here. You draw a resistance line. The resistance is anything on top of that. Okay. So that's kind of what happened here on daily chart. Yeah. So that's kind of what happened. So we on the hourly chart, we have the resistance line kind of here. So the market has been like that. It's been some time like that. This is the, let me see, let me look at this drop a little bit like that. Okay, cool. So that's kind of what happened. Market is right now is even this drop, market was still at all-time high anyway. Yeah. So that's kind of what happened. The step number 2, step number 3 is our support and our resistance. So we are close our resistance line here. Step number, yep. If you look at indicators, we look at Bollinger Band, which is a really nice band. It's a really nice band because every time it goes above or beyond the band, it used to pull back. We have a band here, it pulls back, and then on Friday, just a few days ago, there's a band going above outside of our band. There's a pullback kind of going on. Yeah, every time there's a band above that, it tends to pull back. Right now, we are kind of in the middle of in the inside of the band right now, so it's not quite there yet for any significant thing going on. Okay, so that's kind of what happened. Look, this band is quite nice. So that's kind of what happened, and so based on this as well. So let's have a look. So we've been posted for quite some time to talk about when you see a little bit of the spike of the VIX, which we saw, or when the markets kind of like reach extreme fears time. Okay, let's go over fear and greed a little bit. Do. We're gonna look at this. So you should see, based on the past, what's actually been happening. So let's have a look. So recently we have a deep of the market. Okay. We have a fear kind of spike up a little bit just there. Okay, the fear kind of spike up a little bit just there. And and which is what we want when we have a fear kind of going on, if you remember, on a week 2 training. When you have a bit of fear, we usually recommend you to put a little bit of your money in. Okay, a little bit kind of dollar cost averaging a little bit so that you get your hand itchy, so you feel things a little bit. But because the spike is so low, so if you haven't done it yet, it's absolutely fine. You can do a kind of pending order. I recommend yesterday, I talked about it last week, VUAA. We recommend you to hold your dollar right now and kind of dump your pound. We talked about last week. You can see GBP against US dollar. You can see pound has actually been coming down. Since we talk about it, you can see, the pound has actually been going down like that. Red color. So you kind of, because what's the reason? Because US dollar basket right now is kind of, okay, if I show you GBP against US dollar, again, just for those who missed the training last week. You see that our pound is actually quite high historically. So coming back down is quite fine. Okay. Down, maybe we'll pull back a little bit first, but coming back down is quite fine. So hence this is why we're talking about that. So let's go back to VUAA. So on trading 212 on VUAA, putting a limit order, okay, putting on limit order on VUAA at the price of the 1st of September, which is just around here, the bottom here. Yeah, 11th of September, 1st of September there is kind of quite fine. The price is around, what is that? 12567. Yeah, just around there. Just go back to your trading 212 or any platform that you have. Put a pending order using 5 to 10% of your money. Putting it just right there is kind of fine. Yeah, this is just to dollar cost averaging a little bit like that. So you make advantage of if the pound continues to go down and a little bit of the extreme fears a little bit there. Okay. So, but this is good. This is just to get you warm up a little bit so that you get ready for stuff. But the real thing that's gonna happen is where all our things align together. Okay, when everything aligns together. So let me just show you a little bit here what happened when we reach extreme fears historically. Okay. So and when we reach, if you just use extreme fears where we have it just a few some time ago, which is just right here, it just touches very, very nicely just right there. It touches very quickly and nicely just right there. Okay, let's have a look on that real quick. So historically, when that happened, let me show you kind of what happened. Okay, so you kind of know what to expect. For example, we have a small touches here on 11th of March. Yes, that is the bottom of the market. But at that moment in time, our valuation of the market is -10. So our market is very undervalued. Okay. And then we have a blue line touches here. You can see the blue line here. This is 26th of September. Okay, the red line is the S&P 500, by the way, and the blue line is the Fear and Greed Index. Okay, we are looking at here right now what happened in the past, which is around here as well. We're gonna do it very objectively. So you can see here, 26th of September. This is 2020-23. Is it the bottom of the market? Um, Potentially, yes. It did came down a little bit. You can see when you buy here, it went up a bit of pullback before it comes back down really nicely. Yeah, it comes back up before it comes up really nicely. The similar here actually. Let me see. Okay, this one just come down like that. Okay. So yeah, so it comes down to extreme fear a little bit, and then the markets pull back like a fake out, and then it form a even lower drop. Another extreme fears happen, and then it comes back. And then do we have extreme fears again? Okay, there's an extreme fears here in the August just there, and then pull back, and then we have an extreme fears just here, 16th of December here. This extreme fears is very fake. The market valuations is very bad. It's not undervalued at all. So this extreme fears is a little bit of the pullback. So which is where we are right now. So I'm just gonna show you, even though we are in extreme fears here, this one you're gonna make money. This one you're gonna make money. Okay, we have two here. This extreme fears you can see like that, and then it pull back, which is what we are seeing right now. Like 1%, 2% of the going up there before a really nice things coming back in. Okay. So this extreme fears is like 1 to 2% before it comes back down. Let's look at another one. We have another. So this is the whole thing here is touches here, which is what we are seeing right now. January touches here. 13th of January also touches here. And then we have 24th February, like there, touches there as well. Also coming down a little bit there. And it went back up, coming back down. So extreme fears means you want to get ready, yeah. But we have a lot more powerful strategies. Which really shows you there's a time to be getting ready. That means you want to set your trading platform, everything kind of set, kind of get ready. Okay, so you see, even though if you buy at here extreme fears time, which is if you buy right at the top here and you take around 6 months, 7 months to kind of when it deep down to come back up a little bit. So right now, if you are putting pending order to give a little bit of discount, this discount is very small. It's like 3%, 4% kind of discount here, like what we told you, do a pending order there. That's kind of okay as well. But the real thing that's gonna come in is where our market valuation is actually showing powerfully undervalued. So let me just show you a little bit. Let's just go to these open insiders as well. Let's click on that. Sentiment a little bit, crypto a little bit. Let's go at crypto. Crypto is getting interesting a little bit now. Yeah, the market valuation and NAIM. This is important. You always want to go through kind of everything like that. Really powerful stuff. So let's look as this is open insider to look at any smart people are buying right now. So if anyone knows more about the company, it's gonna be the CEO, the directors of the companies. Okay. So if they are not buying, if you are rushing, then we don't know what you are doing. So you can see, um, when everyone is panicking, of ads going on here. You can see when everyone is panicking. Anyway, let's just wait for this. I'm just going to show you. You can see in 2000 internet bubble, in 2008 financial crisis, and all of that. I will just show you who is actually buying the market out of everything. Okay, so the blue line is the purchase line from officers and directors, CEOs of the companies. Okay, and you see when the blue line is really at the top here. Let's see. Okay, I'm gonna zoom in a little bit. So, like for example, the blue line is here, 2008, November time. Guess kind of what happened. November 2008, when the financial crisis is crashing big time, people are crying big time. What happened? Would you buy or sell? Down in the chat box for me real quick. This is the opening insider. Chat box for you real quick. Yeah. So this is to the November 24, 2024 when the market as when the internet bubble sorry, when the real estate bubble are still going on. 2008 are still going on. 2008, just on the 2008, are still going on big time. That's actually what happened. So let's have a look. So Harjinder say bye, Laura says bye. David, hello, long time no see. You're welcome. And so yeah, so you will see. Let me show you 2008 November time. Yeah, if I show you a little bit, what happened to 2008 November time? If I show you, very very quickly like that. Yep. So this is 2008 May time, June time crashing big time, August crashing big time, September crashing big time. November is literally just right there. So one person actually bought, and that person was actually, you know, the smart people basically. Yeah, the people who know what they're doing, the CEO of the companies, the directors of the companies. So November time, that's actually the bottom of the market. Yeah, the red candle just right there. There's another spike here. It's not literally the perfect bottom. There's another spike here just here, March time. This is 2009. And this is where, the world is crumbling. People are jumping. Let me see, where is that? Yeah. So let's see. So we have another spike here, a March time. Can you see there's a two spike going on? There's actually people start making money like the world has never seen before. Yeah. This is where everyone is running. So, and then there's another spike here, you already know. And also a lot of people bought big time. And then there's another spike here. What happened to this spike? 16th of March 2020. It's a Corona time. Our students who've been with me big time make so much money just on that time. And forever they are settled. They just need to do one of these things forever they are settled. Okay? So let's look at what about right now, very recently. So let's go back to 2000 for a little bit. The spike, so you can see. So yeah, the blue line doesn't just cross the blue line, continue to way out 16th of March. That's actually the bottom of the market. Yeah, you saw a lot of our crazy testimonies and stuff like that. This is there. Yeah, this is the 16th of March. You see at the bottom there, crazy, crazy things happen just there. Yeah. And when they go in there, that's it. Their life is ready. This is during Corona time. And they don't have to do anything for the rest of their life anymore. Yeah. Just one of those moments. And then we have same thing here. What is this? May here. There's a spike here going on. So what about right now? So let's see if there's any blue spike going on. This spike doesn't occur all the time, but when it occurs, it's actually occurring. So we have a crossing over here. Yeah, this is in March times as well. Really nice crossing over. May time. This is 2023. Yep, you see the crossing over there. Usually it doesn't cross. Usually it just separate really nicely. These are all beautiful bottom of the market October time. Okay. Now, right now, and then we have another one here. This is in April time. If you remember April 10th, which is what we have for tariffs here. April 10th, April 28th. There's actually the beautiful tariffs. Yeah. You see April, 7th of April, just right here. 10, 28, just right there. Really, really beautiful bottom when they open inside the cross. When that happen, you have to bite your tongue and just click it. Okay, you have to buy your time and click it and just book our one-to-one session just like that during that moment. Okay, so right now you will see it's been really, really separately right now. If you see carefully, 1st of October, a little bit there. Let's look at the blue line to see if anything is doing anything right now. So the blue line you can see is that indeed there's some spike going on. 10th of October, there's a bit of spike. 14th of October, a little bit of a spike there going on, but it's not really crossing over. Okay, it's not really crossing over. So the CEO of the company, the Tim Cook themselves, and Nvidia themselves, Jensen Huang themselves, is actually been doing the opposite. If I show you what Jensen Huang has been doing, NVIDIA directors of the company, you know, his stock holding, recent activity. Can we see this? Let's have a look. You know, while people are getting very impatient at the moment, he's actually been, October 15, October 10, October 7, October 2nd. Let's have a look. Let's look at his pattern a little bit. So he's been selling the shares at 189, 195, 189 like that. Stock gift. Okay. Stock award. Mm, June, no one was selling. Let me see. We need to look at the specific directors though. More. Let's click more. Let's look at his name a little bit. Stock granted. What about the May time when the market was okay? Let's can we just look at him? Let me see. How do we just look at him? There's another website where you can just look at that person. Let's have a look. So that's what he's been doing a little bit. This is just him. You can see he's been selling 16, 13, 8 like that. Let's go to page another page. Okay, cool. Let's see when did he buy, if there's any buying thing going on. Give and exercise and stuff like that. They've been given a lot of things as well. Let's see. 9663332. Okay, this is where he got all the shares. Okay, cool. So let's continue. So we've got C. Yeah. So that's kind of what happened. So recently he's been as you said, if you've been studying a little bit, you can see this is kind of October time. It's been kind of plumbing a little bit just right there. So selling doesn't mean a lot of things for directors. That doesn't mean that we should sell. Absolutely not. Because people sell stuff all the time. Okay, people sell stuff all the time for personal issues, for wanting to acquire another company, want to buy another things. Like Elon Musk sell his shares all the time to fund his rockets and stuff like that. Yeah. But it's just good to see that a lot of the sellings is actually happening. Just around quite recent times. Yeah. Cool. So where are we? Like right now, we are going there. Let's have a look. Oh yeah. So that is for open insider. So we haven't had a crossover yet. Yeah, this is a very, very strong signal. When you see the crossover, you kind of want to be like put at least, 50% of your things inside. If you put 100% of the things inside, I want to say congratulations. Cool. So that's Open Insider. And then let's go into our that thing a little bit. This is this is a sentimental sentiment. Sentiment is also really powerful as well. So you saw how do you use this sentiment? You draw a line here, draw a really clear line there, and you call it a day like that. And then you draw another kind of like another line at the bottom there. So every time it crosses this above two lines, you kind of want to take a screenshot all the time because it's only give you July. So if you go to screenshot, you get to see every single time what happened and how to make a lot of money. Yeah. So you saw every single time when we are crossing allow around here, things go up a little bit. Okay. So you just look at this line when we're crossing a little bit here, things goes out a little bit. We have a little bit of a cross here. So there's a dangerous part a little bit. It's showing that it might go up a little bit there. So that's what the cross that we have there. And then we have here, there going on. So if you want to think the market is going to come down, this is where the things come. So right now we are kind of in the middle right now. Okay. So this is interesting because remember, we always go against the retail traders. Okay. We always go against the retail traders. So I'm going to talk about this. So this is really, really powerful if you've been taking screenshot of them all the time because it only shows you till July 28, so always 6 months, you can see a really nice clear cut pattern here. Let's see. Let me see if we have more of this. Short mixed contrary indicator. So if I show you what does that actually mean, like for example here, 55, 56. And then this one was 63, 44. Okay. So it's like aiming the top and the bottom. Okay? Aiming the top and the bottom, basically. That's how to use this in a correct way. So you kind of like look at the numbers a little bit. Oops, let's just draw a clear straight line. Draw a really clear straight line. You know, every time we are at the top or the bottom, your brain opens, basically. Yeah. Your brain kind of get ready and get ready. Cool. So if I show you a little bit more of that, so you can see it clearly. So if I show you like GBP against US dollar, because you will be like, oh, is it gonna come down or go up now? Our pound sterling and stuff like that. This is gonna tell you a lot about it. So do the same thing for those who are new. You draw this line. This is all on my website, by the way. So you're just gonna go, let's draw a proper straight line. Okay, let's draw a proper line. A proper straight line. Yep, like that. So that's how you make a lot of money on this straight line. Just draw a straight line like that, and you make a lot of money like that. So let me show you a little bit. You want to back test them. Sometimes if you back test them, if they work really nicely, it tends to work really nice again. Okay. So you see that every single time when this is at the peak, our pound sterling used to get stronger. Okay. So you just look at the peak here. When we are at the peak, our pound sterling kind of gets stronger a little bit just right there. Where the peak here, our pound sterling is kind of like gets stronger. There's a pullback going on. So right now, we used to have a peak here, you saw, and the pound's come back a little bit. Okay, right now it's still kind of in the middle stage a little bit there, but you are very, very sure if we are at this bottom, we're at this bottom, you can see when we're at here bottom, pound always drop like that. When we are here bottom, the pound always drop like that. So right now we're just waiting. So if you want the pound to drop really nicely, you want this blue line to be here. So right now it's kind of in the middle. So it might go in the middle a little bit. Okay. I'll pay attention to this really nicely. And let's see if we have any more other than that as well. What about other stocks like France a little bit, Germany a little bit, Nasdaq, UK, and US? So you kind of have the back test a little bit. Let's get gold a little bit there as well. There's not much. We don't recommend using sentiment data. Yeah, because people are just doing one thing only when doing gold. What is this? This is US 30. This is also quite nice if you've been plotting the graph for quite some time. So you can see we're just like that, just there. Every single time, then that spike, you will be like, I want to add some position just to get ready a little bit. So we are here. Sorry, this is a spike. So things goes up. There's a spike here. Things goes up. And let's look, where's the next spike? The next spike was just right there, and things goes up a little bit. The next spike was right here. Things goes up. What about when it comes down? Let's have a look. So what about when it comes down? When it comes down, you can't really say when it comes down. There's not is a good criteria for buying. US 30. US 30 is Wall Street 30. UK 100. Um, it's okay, but it would be nice to have more at the back. This is Nasdaq as well. It would be nice to have more at the back. Okay. This is Germany. Germany is a little bit easier. Okay. So the same thing here. You just always aim the top at the bottom. So there's the top just like that. So you draw here and you aim the bottom just right there. Okay. This is Germany. So you'll be like, okay, what do you think Germany is gonna do? Usually do it together with us. So let's have a look. So you draw this a little bit here. So you'll be like, okay, this is the top there. So it's more likely it's gonna bounce, which it did bounce big time. And you draw another here, you'll be like, which is gonna bounce, which it did bounce a little bit right there. There's another bounce here. This whole thing is a buy basically. Can you see it's just going out like that? The whole thing is a buy. And then what about the sell? So recently we haven't got the bounce up to the level that we are. Okay, we hasn't got the bounce up to the level that we are. So what about the bottom? So let's look. So when we are here, the line, it tends to come down. So let's look at another line. Where's another line? Another line which is here. It tends to come down. What about right now? Is it gonna come up or down? Right now we're kind of in the middle, just right there. Okay, the middle right there. But if you can pay attention to this, just take a screenshot, just alternate three like that. So when it comes to around here, around 40, you'll be like, okay, there's where market is gonna correct a little bit. Yeah, cool. So yeah, so that's kind of what happened just right there. Oops. This is all in the V2 training if you've been watching carefully, yeah? You just have to draw a line and then you'll be able to tell. If you use this carefully, you will see there's a lot of opportunities kind of going on. Let's see. You got the one on top. Okay. GBP. All right. So that's based on the website here. I'm just going through one by one here. This is what you should be actually been doing. But the most powerful one is actually on the market valuation. That that when that happened, wow. So you can see the fear and greed just right here is 34. I'm repeating this right now so that you completely get ready when the things happen. Yeah. So you kind of know what is really the important bit. So you can see the market fair valuation right now in the past 5 years. You will see that every single time when we come to when the market is undervalued here, it's actually you want to go all in. This is actually the bottom of all of the markets. Yeah. So you can see the last time we have here is around April 7. We talked about it last time. If you've been here the training here, October, this is actually the bottom of the market. These are all the bottom of the market. So if you really, if you just aim one of these times, you are done for your life. Okay? If you just done, you are so settled for the rest of your life. Just aim one of these time, wow, no one is gonna be able to stop you. Right now, our markets are around, it's a little bit still overvalue a little bit. Last time we have an undervalue here in the 1st of August. When that happened, there's a bit of a pullback. The markets went up a little bit 1st of August. Let me show you. 1st of August. Yep, just here. So a little bit of position here a little bit when the market is undervalued a little bit. Because markets rarely undervalue a little bit like that. Yeah, just a little bit there. Usually it happens very rarely. If you buy in March, it's fine as well when it just started. Let's look at 3 years. Yeah, when it could cross a little bit here, January 4, if you buy, you're also gonna make money. April, if you buy, you're also gonna make money. May, you're gonna make money here, you're gonna make money here. September, you're gonna make money here. Yeah. So it comes out to around the blue line. That means the market is a little bit undervalued. November, you're gonna make money there. Okay. So if you really want to buy, is wait for kind of like there's a little bit of the buy, but the real things that we use a lot of leverage, even very small amount of money, £200, £500, if you use some leverage when the negative 10, wow, this is it. Okay. So that's kind of what happened. We people talk about leverage is when we do it here. We don't do it when the market is all-time high or when the market is very, very overvalued. Yeah, because when market is too overvalued, like what happened to gold, if you just keep chasing after gold, it's gonna go higher, it's gonna go higher, it's gonna go higher. And you'd be like, wow, I can't wait, I'm gonna use leverage. And it comes down like that, then it's not so good. Okay? That's not so good. It's gonna take you out a little bit. But if you do the extreme fears time when we're at the bottom, that would be really nice. Cool. So that's kind of what happened there for that. And then this is the sentiment that we have. Okay, let's look at the sentiment a little bit. Heavy users. Wow. Okay, anyway. So there's NAIM report. You just have to talk. To buy is at the actual bottom. To buy is when things need to be at the bottom there. So let's look back into our sentimental. Just gonna click this one by one. AARN sentiment. You kind of have to memorize this. There's no understanding for this. This is the memorize. Cool. So October 15, we have one of the most bearish time that we ever seen. Actually, September 10th as well. 49% bearish. Okay. So you look at September 10. Let's have a look. We have a September 10 here. Yep. Where is it? Yep, September 10 here. I think it's on the resistance line. So a lot of people are very bearish on this resistance line, and it comes higher on this September 10. A little bit there. So, but this is okay because eventually it come back down here anyway. So this is not a really strong. So 48 that we have, 49 is not very strong. The really strong one, let's download the complete history. The really strong one is when we talk about it, is when we have around above 50, okay, 55, 50, 60. That will be some strong one. Yeah. If you look at the highest, it's actually 61. You'll be like, oh, I can't wait till 61. You know, 61 is actually the highest that we got. So now it's around 46, which is okay. The 61 is the bottom of the markets as well. So if you can wait when it gets around 60, around 50, there so you can start putting your position on. 46 is fine. The last time when we have is around 49. Even that doesn't really, it's not really, a few days later it comes back down again. So might as well not. Okay. So this 46 right now is okay. But when people are super bearish to get to 50 something, 61, this is okay. Okay, so this is still okay. So that's kind of what happened here. So that just means what? That just means stay on target and really being patient is really the game right here. Yeah. You can see today it's been, it's been a bit down like that, just right there. Yeah. So that's kind of what happened. And let's go back. Awesome. So that's the first step. Let's go back to our. So that's kind of what happened. Yeah, in the market right now. So Trump is supposed to, if there's no deal by the 1st of November, you already know, Trump is gonna increase the tariff by 155 on the China tariffs and stuff like that. So there's a lot of like it's basically about as much as it's about him saying something, as much as about waking up to think about how he's gonna feel, as much as about that. And we have lots of tools that because if he says something bad and the markets is going to tell us using our strategies that we talk about is going to give us an indication of what's going to happen. Okay. It's going to indications of, okay, there's a time where we should actually, go in and do many things like that. Yeah. So let's have a look right now on some of the trades that we kind of seen before. Today's have an earning release for Netflix today's as well. I mean, probably just right now. This is Netflix earning release going higher like that. And then they post something and Elon Musk didn't like it. He started to so today is at down around 5-6% there. Okay. Netflix is one of the biggest company, one of the top seven as well. If all of the top seven companies is showing guidance that's not very good, there's also a sign where market corrections might happen as well. We're actually on the earnings seasons at the moment, so there's a lot of companies releasing their earnings. Cool. Let's look at some of the companies right now. Um, so we're gonna go to market screener. This is on the week 4 training right now. Let's have a look. The news. If you done your companies, let me know so we can look at it straight away. So you go to news, go to companies, and then you go to guidance like that. Yeah. So the profit warnings that we have. So 17, 18, we got a little bit here. I see. Okay. Sure. So if we go back to let's have a look. The way where we do this earning guidance is that we kind of want to see if it has happened before or not. Okay. You want things that never really happened before. Okay. Like we did some time ago as well. So this is kind of what happened. So when we are doing this, in order for you to get the confidence, this is what happened last week. In order for you to have the confidence to see whether or not you should go in, they are all quite similar situation. Gurus, revenue are expected to decline between -4 to -2. That's okay. We want to be more than 10. This is SEPs as well. SEP, they give you the change in DCF. The true value is 70. The thing is, it's actually already dropped to 50. So when it's 50, it's kind of undervalued. Okay. DCF means what is the true value of the stock. This is a bit detailed right now. Some people might not get it, but just accept it. DCF means it's a discounted cash flow. It's telling you about what's the true valuation of the stock. We just copy and paste it from Market Screener. This is all last week. Okay. 70. But if you look at it carefully, SEP, this company, has actually dropped to, yeah, SEP SE is actually dropped to 50. The news happened on, we need to look at the news. Yeah, the news happened on, so it's saying the top value is around 70. Yeah, this is the true value of the stock. So right now is, when it happens, it's around 50 already. So a little bit of undervalue there. So it's like coming back like that. So when we are doing this, it's really important for you to plot the earning guidance to see how much it's going to continue to come down. Okay. So that's really important. Let me see. So these are very big base thingy going on. B and M, a lot of people got into this as well, and they make quite some money. So let's see. Expect core profit to be 510, 665. So down from 620 reported a year ago. Short because it's 20% drop in core profit. And when we compare with these competitors, retail France business posted like for like sales growth 5.2. So other people are growing their sales, but this is dropping 20% their core profit. So there's some problem there. BVs as well. So when we plot the graphs, you will realize that this is actually something that's never happened before. But in order to know how much it's gonna drop, you kind of have to plot the earning guidance to see when I am at 510 million pound, where is my target? Okay, that's so important. And then what else do we have? Yeah, this is just reducing brown one. So the two big one is RBs as well. This is all happened on 28th of September. So let's have a look. If I go to RBV on top there. Yep, just right there, coming down slowly when the market is going sideways. And then we have this B and M. B and M just right there. Let's see. So yeah, that things happen on 8th of October. And it's been coming down really nicely because it's 20%, which is quite big. This RB is only 10 to 11, so it's around 10%. Yeah, this is 20%, which is dropping their core profit, while others retail or other competitors are showing a growth. Yeah, and if you plot the earning guidance graph, you probably see this has never really happened before, and it coming back down like that. So in order to see where is the target profit like, you can have to plot the earning guidance quarter graph to look at when we are at 510, what is the numbers in all of that. Yeah. So well done. A lot of people make some profits on that as well. So now we're gonna go through your earning guidance again to see what's gonna happen. So if you've done it, just say me so we can have a look on your earning guidance. Let's have a look. Awesome. We shall say guidance is quite confusing. Can we plot earning guidance? You need to make sure you watch the well done. I love that. This is earning guidance is the most confusing part, is the most difficult part of probably the whole journey of anyone trying to become a great trader and investor. Yeah, because this is where you actually have to become a business owner yourself. Yeah. Like Warren Buffett spends 5 hours, 10 hours a day going through word by word, but eventually you know what to focus, what you don't have to focus. Okay. A lot of great traders, a lot of banks, they sit down and this is what they do. They go to word by word of what happened to the earn to the what companies gives. Just imagine for a second, yeah. You own a relationship report with your spouse, okay? And every 3 months, you talk about what happened to your relationship. It's gonna be confusing. It's like, okay, you talk about spiritually how you're happening right now, dinner, what you're happening right now, finances, what you're doing right now, salary wise, everything you're talking about right now, you'll be like, wow, there's a lot. It's very confusing. But if someone wants to judge your relationship with your spouse, That's kind of that's kind of what they have to go through. That's the only thing anyone could have gone through. Anything else is a fluff. If they want to judge your relationship, if they want to judge how good is a company, that's the only thing people can look at. Nothing else. Not this charting where you plot your car chart, you support resistance like indicators. No, none of that. The only thing, I'm gonna say that one more time. How anyone is gonna become a really, really great investor, okay? Is actually you have the confidence to buy a stock as much as you are being very patient. All the sentiment that we talk about, super patient. The most successful investor is the people who are super patient. Because as we talk about the transferring to make a lot of money from the market is a transferring from the impatient to the patient. So that's already 60% of your emotion. There's a 60% of your game already. And the rest of the 20% or 30% is about choosing the stocks that's actually because stock go up and down for a reason. So this is where going through the earning guidance really, really top the line. You can go through the whole thing. There are thousands of pages. There are like 500 pages on an earnings. And there are 500 pages on your relationship with your spouse. People can give you 500 pages, like, oh, things like that. But there are tips to make it easier, because you're on the right mentorship training, there are tips to make it easier. And the tips to make it easier is when you go through the guidance, they will say, they will be like, this relationship will be like, you know what? I think we're gonna stay forever. Something like that. So that's your guidance. So you're looking through that only. That I think in the future outlook, our relationship is gonna stay forever. So that's the guidance that's gonna give you to say, oh, should I invest in this relationship with this person? Let's pretend, or with this couple, pretend. So the same thing with this company. Company you are looking for where they are giving you specific guidance to tell you that next time in the future, what's gonna happen. Okay, so you're just plotting that graphs. Yes, it's the most confusing graphs only if you never done it before. It's like when you first drive a car, you never done it before, it's going to be one of the most confusing things ever. But when you do 5 times, wow, you'll be like, wow. So when you go through the week 4 training, what I want you to do is don't do another company. Do the companies that I just discussed there. And then you do 5 times, you'll be like, wow, it's actually just like that. And you'll be like, wow, that's it. And things get easier and easier. Okay? That's kind of what happened. But during extreme fear time, I mean, when the market is undervalued at the moment, the work that we've been doing, we're gonna have sessions. We're gonna have sessions at the moment in time because when the mentorship training on the session, we're gonna be like, okay, this is what we are recommending. This is what will be. I personally will be looking to get into at the moment when the times comes for people who don't have time. Okay, and who people don't have time when the times actually come. So, but you, but in order for you to have the confidence to stay on, you kind of have to understand how it works behind the scenes. All right. So that's kind of what happened. Well done. Let's go through that straight away right now. So let's have a look right now. Awesome. So upload the graphs so we can see it straight away. Buying a stock for spread betting points, still don't know which one. Let's look at the mail a little bit just right there. Really, really, really good. Because when I first started like 15 years ago, we run away from places like this, from these words. Yeah, 95% of the traders and investors, they don't look at this stuff. But the only reason how we know that this is gonna drop, this happens on way before that happened, 8th of October, 27th, 28th of September, way before it happens. The only reason why we know B and M is gonna drop, you've been plotting the graphs. The only reason why we know it's gonna drop is actually because we've been doing the earnings guidance graph like never seen before. Yeah. So it's just about initially you do have to spend a little bit of the time, or we're gonna do it together as well. If you're on the proper one, we're gonna do it together. So then you kind of know how what's gonna happen. Yeah, well done. Cool. Let's have a look right now and to see what's gonna happen. Just right there. Awesome. So let's have a look. Look at Mel's homework. Well done. Let's have a look. So this is why submitting this is really important, if especially if you still don't know how to do it, so that we are here to correct your blind spots as well. So just need to send me the link like that beautifully. Awesome. Let's have a look. You're welcome. So let's look at HP real quick. And let's see. We're gonna start from here. Okay, cool. Let's see, where's the graph? HP graphs. Do, do, do. Uh, how do I make it smaller? Let me have a look. Do, 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 do. Do, do, do. So this is where we are at. Okay, it's at the bottom. Awesome. Beautiful. Yeah, it's really beautiful. Well done. So let's have a look real quick here. So you see, let's see where we are right now. We've got this September 3rd, up 9%, due down. So this is where all the numbers come. So you wouldn't be able to understand any of this if you haven't plot those graphs. Okay, so you kind of have to go through manually, and there's no shortcut to this. The only way to know how to plot the earning guidance graph is actually you have to go on to plot it. But let's have a look on this. So, this is analyzing right now. There are two skills needed to know how to plot this. First, you got to able to get the data, where to get the data, and the second skill is this. Okay, let's have a look. Second skill is analyzing. So 9 grows 29%, 29% down, zero from down. Okay. Let's see. Margin, net loss, not cash flow like that. Non-down previous year. I think what you've been plotting is the result graph. This is the biggest mistake that anyone make. Okay, I want to look at this because everyone, when they first started, they do this because this is the numbers that is given the big one. The small print is the guidance. Okay, so this is not the guidance. Guidance is usually a range of number. Okay, Mel, you're doing really well. Guidance is usually a range of number. So let me just go through here. So the first sentence, growth forecast to between 17 to 20, not 5 to 10. That's okay. Forecast, the first sentence, this is a market screener. I'm going through word by word for you, paragraph to paragraph, so you know what's important. This is not really important. Share down, not really important. Not really important. Will emerge. HP target growth, not important. Expected double. Um, projects mean expect. This is where the money comes. They say in the to be between 2.2 and 2.4, expect to grow 17 to 22 compared to 17.2, so it's a down. Okay, it says 17 to 22. Okay, so company says cut jobs and stuff like that. Cash flow 1.5. So because it's the only thing you look at, you need to know which one to look at because there are a lot of things. So we don't look at this. We don't. This is okay. It's a drop. Okay, the cash flow drop. So you will be shorting this. Plan to cut jobs. Growth 17, 17. So it's the drops as well. So they are both negative. So we could have short HP. However, this is a very small drop and it's still growing 17%. So it's still quite big. So we wouldn't be shorting it. 17.2 to 17 is less than 10%. So we're just going to skip this straight away. Yeah, very good. So let's go to the next one. This is what you do. It's a lot of trial, a lot of knowing, but once you do like 10, you will be like straight away. You will know what is good and what is not good straight away. Yeah. Awesome. Well done. Let's go to the next one. Do. If you have it, just send me your link here. You're doing really, really well. Awesome. So there's a really beautiful graphs here. Very good. Let's have a look. Let's look at these B and M graphs real quick. Sometimes, sometimes if we can't see the bottom, we have literally have to plot from the beginning of the time. Okay. But let's look at this B and M graph really carefully, really nicely. This B and M. Okay. So let's have a look. So currently between 550 to 600. This one is confirmed previous 550 ahead of pre-pandemic 342. Okay, so let's go to the one that we have here first. Approximately expected to be 470 compared to previous 510. Is this the latest one? Oh, okay. Looks like they have a latest one going on. H1 report another 191 compared to previous guidance 196. Okay, interesting. Okay, let's see what this is going on. Yeah. So, it would be nice to have the date. Let me look at the date. Okay. It looks like they give another guidance again in 2 weeks. Okay, let's have a look this real quick. So, um, let's go to the company official website. This is to see what happened, yeah? If you don't understand, just go to company official website, B&M. What company is this called? European Value Retail. European Value Retail. Let's have a look. So you go to the official website, type investor like that. And then you just go on this presentation slides, you go on that. And then once you do that, you're gonna go into, let's have a look, the PE ratio of these guys as well, just to see what's the PE like. Hmm, let's see the PE of this person. Okay, so let's see, the medium is 7, the current is 6. Let's look at this. So usually it's around 13. Now it's around 6. Okay, the P is actually quite low. Okay, now PE low is one thing. You want to make sure the growth is still there as well. Okay, we'll go into it. We're trying to understand the companies in detail a little bit. Just trying to see if the growth is still there for companies like that. Okay, let's have a look. So we go to investor and position investment case. Well, let's read a little bit. Position for long-term compound. Let me start. Offers growth. France provide growth. Positive inflation. New stores in the UK. Okay, let's look at the investor news reports and presentation. So October 20th, they suddenly have an update of the guidance. So let's open this thing. Information to change of post-settlement arrangement, FAQ, presentation slide, 7th October, we have that. Webcasts, trading operation and all of that, annual reports, presentation slides. Okay, let's see. Updates, 7th October. It's right. I get where you come from, Vishal, because if it is not in the US, the guidance can be a little bit difficult to find. Yeah. So let's have a look. So this is the is trading outlook here. So this is the outlook that we have. What it's saying is 2749 deliver B and M. Let's have a look. 0.1 EBITDA 1195 trading update. This is a trading update. We want the outlook. The outlook is here. So this is where your money is. Okay. So this is where you want to this is where you copy everything you put into Excel sheet in a beautiful way. So let's have a look. While full benefits will build over time, we have gradually improved UK and stuff like that. Margin, adjusted outlook 510, percentage growth negative. You need to know what is LSD and LSD. They say on their paper later on. Leverage, margin view baseline for future, assuming growth in the UK. So that depends on how the UK is gonna do. Okay, so that's about that. 510. So let's look at the latest one they have. This is in October. The latest one that they have probably is this one. Business overview, strategic, all of that. European change. These are all already happened. Okay, weeks already happened. Reported already happened. So we don't really look at that. But it's nice to look at growth 3%, 0.% 5%, 1%. So this is not a very good growth stocks because the EPS of this stock is actually minusing. So if you go to Finvis, this is what we call as a value trap, where the companies is getting cheaper and cheaper, the P ratio is getting cheaper and cheaper, but the growth of the company is actually minusing. So let's go on here, and I'm gonna type B and M value. Let's have a look. B and M. See if it comes out though. Just give us a growth rate of the company. Even though it's already say that it's -5. Okay, let's type what company is this called? European value. Let's type that. European value. Okay, there are two websites that give us a growth rate. The first one is Finviz. The second one is B and M, European value, Yahoo Finance. Let's see. Uh, do, 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 do. Let's go to analysis. And then we're gonna go to the growth a little bit. Sales growth, according to this website, the sales growth is around 4. What about previously? Oh, the EPS growth, current year growth was negative. Next year is around 8. Okay, there's some growth going on next year around 8, and current year is around -23. Okay, let's read it carefully to see if it's true. Growth is 4, next year is around 4. The sales growth is around 4. Remember, what kind of value do we want if you really want to buy a stock? You want the stock, if you want to really make money, big time, you want the growth of the stock to increase more than 30%, if you remember. Yeah? Anything below 30%, we just don't waste too much time on them, because if you put your money somewhere else, you're actually gonna make more money. It's not to say this is not gonna recover, but it's just to say that when we are at extreme fears time, if we haven't bought it at extreme fear time, you want to buy something is more than 30% growth. All right? When the market is undervalued by 10%. That's the meaning of extreme fear. Okay, so that's kind of what happened. Okay, let's go back then. So it's good to know the growth rate of this company. So it's less than 10% growth. Okay, but they're gonna tell us here anyway. So last time was -17. Last time free cash flow was -18. Revenue grew, EBITDA, net debt, and all of that. Primary result. Okay. Highlights: group revenue increased 3. This is where we go down. Remember, we talk about the babies, the 10 babies you will always understand. That's where you read kind of a little bit, just get a feeling of what the growth is like. Yeah. Profit was decreasing 1.8% and stuff like that. Uh, free cash flow, principal year on year, recommended dividend, adjusted capital. We open on the 70 new UK imports, domicile. So this is telling you year on year. Last year was 6, now it's around 3. France last year was 16, now it's 7. They have a food store, 30, now it's negative. This has already happened. Just so that you get a trend of what's gonna happen, yeah? 12, 12, and 9, 8. So it's around, it's a retail sale. So it's around there, 12 and 11 and stuff like that. This has already happened. Supplement result, BNN, business overview. Uh, this is already happened. Strategic summary. Let's look at where's the guidance. Financial review. Ended and all of that is already happened, okay? So you know that retail sales usually around 10% growth, usually. That's what they say. So you got a feeling of that a little bit. Dividends, all of that at the bottom. What paper is this? Where is the ongoing concern as a value economic themes, directors, bonds. Okay, this one you want to use ChatGPT to really understand in layman term what it actually meant. It's a bit of ongoing concern, especially when you're holding things that for quite some time. So let's see what I say. Growth, November issued, all of that. Revenue. Consequently, confident we have sufficient funds to meet their liability. They feel for at least 12 months from the date of approval of the financial statement, and therefore have prepared financial statement on ongoing concern basis. So people are worried about, okay, is this gonna go bankrupt? Okay. Ongoing concern usually means it's gonna go bankrupt or not. Like we work before they go bankrupt, they tell you 3 months in advance that they're gonna go bankrupt on their papers. So if you didn't like sit down and actually, go through them, you never know them. Okay. As a retail group is well positioned to withstand volatility. Forecast projection take consideration in adopting on the ongoing concern basis for preparing. Directors have considered business activity group principal risks, consider financially, consider everything. 12 months, do we have enough to go through the downside problems? Having considered all of this, um, consider concern with those is used in the longer term. There have been no significant post on November. High bond with interest of sales would have sufficient. So at the moment, they're saying that it's fine. Okay, they're saying it's fine. They will have money to continue. Okay, so that's kind of what happened. And ongoing concern is normally happen for companies that you know, like by so you have to pay attention to these companies. So when the companies release their next earnings again, if they say that they will tip you though, they will give you hint. It's so powerful. And a lot of people make a lot of money. So if they say that, no, you know what, guys, we're gonna go bankrupt. So the stock will continue to go down for 6 months beautifully. A lot of our students show like we were and stuff like that. When they say things like that, they will continue to go down really, really beautifully. Yeah. So that's kind of what happened. So at the moment in time, they are having no concerns. Okay. So it depends on what you want to buy or what you want to sell. So that's kind of what happened. So let's continue. Revenue, all of that, goodwill, all of that. Brand, tangible depreciation. Why? Where is this paper from? Let's look. Share options, inventory. Obviously, they can't buy back their share, I think, because is any share buyback? Defer tax. Let's get this tax a little bit. Is any share buyback? Where do we get this paper from? Let's have a look. Where is this paper from? This paper is from. I'm trying to click this. Is this the one? Okay. Okay, this is okay. This is the different papers. Yeah. Okay, let's look at these papers. 20th of October. So that papers that I was reading just now was what day is that? Probably what day was that paper? Probably one of those papers. Okay, we're gonna go through that one by one. Okay, let's look at the latest papers for stock October 20. Okay. So let's have a look. Financial half identify 70 million of overseas costs not correctly recognized of cost of goods sold following an operation update earlier this. The underlying issues has since been resolved, but the financial impact is material to our outlook for our full year. Therefore, reduce our outlook based on the revised second quarter margin. Now, this is good. Now, this they are telling you what's the reason they reduce their next year outlook. Okay? They're telling you the reason. You want to, this is really important. This is really important statement right now. The time to short a stocks is where you read the outlook and it's actually because the company itself has problem, the rest doesn't have problem. Okay? Ongoingly. That's kind of what happened. But if the whole sector has problem, the whole tariffs have problem, it's not really a shorting opportunity. Okay? You want to make sure it's because of the company itself has some problem. So let's read this a little bit. So this is something that we can actually show. So financial outlook, it's like when toy companies they went when they go bankrupt, toy company because people don't buy like play so much kind of toy anymore, toy R. And we have a camera. We used to have a camera companies because we are looking about shorting companies making a lot of money to short. When we are camera companies, people used to have this Kodak, very famous companies. But iPhone comes, they take the market share of the Kodak. Kodak gone soon. So at the moment in time, what you're actually thinking as a great investor, you're actually thinking about what about the future of this company. Yeah. That's what you are thinking about. You're thinking about the future of this company. So this is where really, really money comes. But anyway, let's continue. B and M. So it's not just about numbers. It's not just about all of that. It's about having a thinking about what do you think about this company. Let's look at what is this company actually. European value, what do they sell? Okay, they sell a lot of these bargain stuff. Okay. I think they have in one in Shepherd Bush in the VUE store, like that. So they sold a lot of these things like that, like that. Okay, they sold a lot of these things like that. So to compare them, you just have to compare how is Tesco doing, how is Sainsbury doing side by side. If you want to buy a company when that company is growing the fastest or has the most future, okay? If Tesco is increased by 10%, M&S increased by 10%, Sainsbury increased by 10%, all of that, and this is actually not increasing, then it's actually not good, okay? To be buying them. But anyway, let's continue. Or if you want to short them, you want to make sure okay, let's continue. They're actually going down as well. So let's so the first sentence, 20th of October, updating. So they suddenly do an announcement to update, okay? The final year result after announcement, 7 million of the costs not correctly recognized in cost of goods sold. So that means we have cost. So they didn't take this into the accounting standard in terms of their cost. Okay? That's kind of what happened. Yeah. Market screener is probably going to tell you more about this, but it's telling you that, you know what? Last year, I spend money on, I didn't take that into consideration. So let me just put that into consideration right now. Okay. So that's what they're saying. The underlying issue has been resolved. And so as a result, because of that accounting issues, they changed their outlook. Okay. But let's continue. Therefore, reduce our outlook. The group is now expected to be in the range. Now expect in the range. As previously disclosed, we expected principal driver of our outcome within the range. We reaffirm our assumption of our percentage growth between low single digit growth to low single digit positive level. So it's negative 10 to negative 10, something like that. So reaffirm means it's the same. They're reaffirming. So everything stays the same, basically. Yeah, only they're changing the accounting level. They continue to expect growth. They continue to expect growth, stabilize, intense to review this matter. That's about it. Yeah. So that's about it. So they're thinking that, they're just taking the thing into consideration. Nothing going on in terms of like, is this company going worse right now? Nothing going on anything. It's just about they're changing a little bit of the accounting a little bit. Yeah. So some people, so you want to see if they happen like that before, if they change the accounting like that before. So changing accounting is a bit of like, you want to understand what's the reason they change their accounting like that. Okay. But this is not nothing to do with the companies themselves. Okay. They are still thinking about, the growth is negative 10 to plus 10. So if I want to short something, I want to make sure they are not talking about reaffirm, the growth rate. No, if I want to short something, I want to make sure they are reducing their percentage growth and stuff like that. If I want to short something, okay? What about buying? Would I be buying this? If I want to buy something, if I want to buy something, I want to make sure the growth rate is more than 30%. So that's the good news about it. We don't have to hit every strike. Yeah, we only hit the strike that we kind of want. So for people who own this already before they start the training, because some people hold it like 10 years ago, 20 years ago, before they start the training, what's gonna happen and stuff like that. When the market recovers, it's probably gonna recover a little bit, but this is probably gonna stay, sideways, etc., based on our seasonality. Yeah, it's probably gonna based on seasonality to see what this is gonna do, etc. Let's see if there's seasonality on this. So, let's see. So this company has been like that for like that. So to look at the season for this company, you just have to go on to this is October time. So you go back to October time last year. So last year October was down a little bit, and then Christmas was quite good, and then the rest was just down. So that's what seasonality is telling us. Let's continue. Same thing here. October a little bit, and then November a little bit like that, and then afterwards it's just like that. Okay, let's think a little bit more. This is August, and then October a little bit up, a little bit November, December a little bit up, Christmas a little bit up there. Okay, let's continue. This is January. A lot of times January they just go down. So if you look at Oxford Street, January no one's buying stuff. That's what they're saying, telling you. Yeah, it's just all empty. That's what I'm saying. So October time, December time was quite okay. I mean not October. I mean November, December there. Okay, retail. November, December. Okay, so you kind of have to have a judgment a little bit. Let's go to equity clock to look at their competitors a little bit, so you can see what the season of the whole company is gonna do at that moment. So type competitor so that you can get the seasonality of this guy. So let's just do this to see what happened. We're going to a little bit detail right now. European value is really trying to understand as a investor. Um, you're trying to understand a little bit of that. So there's a season here which is quite nice. So as we look at, So let's have a look. So it's coming down in March time, June time, and then October time, November time, December, the Christmas time is a good time. October, there's a bit of drop at the end here. And November, a little bit here. So it's like not going anywhere. And then there's a little bit of there going on. Yep. So it's just one more season, one more chance they have for December. But like this is that the Christmas and that's about that. Okay, so that's kind of let's say it's right really sideways. It's not like a rocket or anything, it's just going sideways like that. So that's kind of what happened for this. The shorting time for this, if you're really looking to short the shorting time for this is just like it's just around around kind of there middle of October time, which is what passed a little bit there. Okay, that's kind of a shorting time a little bit there, but the rest of it is just choppy, very choppy. Shorting time is here, February time. Yeah, February time. The rest is quite choppy for this. Let's go to Tesco to see if it's the same very quickly. Let's go to Tesco. Um, Probably can look at Amazon. So it's the same. Tesco is very similar. They're competitors. October is just like that, like that. November is like that. December is where people start spending money. A lot of companies they just make money during Christmas. The whole year they don't make money. The chocolate most of the time, they just make money like that. One of the Warren Buffett's company the chocolate seeds candy. Yeah, every year I go there, I eat the seeds candy. They stick to your mouth, stick to your teeth, and for that they only make money during December time. The rest, no one buys it. Okay, and they make a lot of money like that. So it's just like that. Apple, they only make money is also during October, November, December times as well. Apple, the biggest company in the world, also make money around that. Yeah. So some people trying to do it every day and stuff like that. Sometimes you just do it one time nicely in life. In life, it's like that. It's not every day. Anyone who keep thinking about you want to do this every day, it's not like that. That's not how things work. That's not how making money, how making big money works. Even you go on competition, marathon, you can't run marathon every day. You go on, you practice, and then one day you do it, your life settle. Same thing with trading and investing. You do it one time, ready, wow, your life settled forever. And that's about it. That's about things for trading for life like that. Most people they don't have a chance, to enjoy that. It's like Apple most of the time or most of the stock they or it's just at that one time you make a really really nice situation there. Wow, forever your life settle. If you look at the lives that you have right now, you change big time. It's actually you make one circumstances, one decision that things becomes nice. Okay, and it happens for stocks as well. So the October, November is like that, December like that. It's definitely the same for me or for a lot of our students as well. The reason why our net worth always catapult big time, it doesn't catapult now, it doesn't catapult like normally. It catapult is big time increase is where during a certain stage that happen, wow, big time change, which is the extreme fear time, which is the so it's not all the time. And we talk about it. Warren Buffett says, in life you only have around 1 to 2 5 strikes, where you don't have to strike every day. It's not about striking every day. You wait for the opportunity to come and you strike that one time. And that's about it. So there are a lot of balls. There are a lot of balls coming into your way, and you don't have to strike that all the time. Yeah. So that's what happened when it comes to doing it, you're being a little bit particular. But when the ball comes, when that is where you shoot your strike. So well done. So that's what happened. So will we short this? Now because we go through how do we have this how do we have this conversation? Let me just think. Okay, because we are going through, let's have a look. Cool. Mel, no one can see it, what you just said. Let's have a look. Okay. Oh, so Anne says FCO stepped down due to accounting standards. Okay. Okay, I see. Yep. So someone stepped down due to accounting standards. It's like the directors of UNF, UNH. No, they remove the UNH directors. They you remove the Nike directors, and the stock actually recovers a little bit later. Awesome. Nice. Awesome. Well, thank you, Mel. Well done. So let's have a look. Mel said the best decision is to take your course. Well done. Awesome. Let's have a look on the next one right now. Very humble. You're well done. This is not just used for a lot of people as well, and eventually you're gonna feel it. Cool. So okay, let's have a look on the next one. So we only realize this when we really talk about what's gonna happen. Yeah, the B and M companies. Why do we not short them, or why do we not buy them? As I said, because it's not more than 30%. Why do we not short them? Because it's actually due to not the future, the business itself. Okay, it's not due to the business itself. Yeah, if you look at a lot of the companies when they change their CEO, they change their directors. Um, um, it's nothing. It's not a big deal. Cool, awesome. Let's have a look on our beautiful students called Niagen. Let's have a look. I love it because we are trying to understand a company. We need to see your graph, Nicloy. Yeah. Uh, Nitrogen is a growth of 22 to 27. So this is still a growth company. So we wouldn't be really be shorting them. Let's look at this. What is this? We want is unchanged. So it's unchanged. So it's not changing. Okay. You want something to change. Well done. So let me just go back to where we were just now before we get to where do I see that just now? Uh oh yeah, here. It's not. I think it's this. Yeah, there's a B and M, yeah. Awesome. Well done for this. Accounting standard drop 7 mil, 40 drop in guidance. Short already at the bottom, 3 to 4 hour, which is stop loss. Where do you continue position outside due to X dividend date? Okay. Um, dividend date in November. Okay, dividend date is okay. It's not like a very, very big thing. You can back test to see exactly what happened when they always have this ex dividend date. Yeah. Okay. Okay. So what I would be doing is if you already kind of hold them of anyone who bought them or sold them, if you've been selling them, shorting them, you want to short until end of if you've been using it, short them, you want to get out at the end of October. Okay. You can see seasonality end of October is kind of done. Okay. We wouldn't be shorting stocks anymore, end of October time. Yeah. And so that's kind of what happened. But if you want to be buying if you already been buying this stock, if you already been buying this stock, you can start taking out positions a little bit just when December kind of ends and stuff like that. A little bit of positions taking it out. I realize that you don't have to take out positions straight away, everything in one time together. You can do 20% taking out like that. Even though when we get into position, we don't get in like everything like that. We get in step by step a little bit. 10%, 10% at a weekly manner and stuff like that. That's also really, really powerful. Yeah, especially when you're not too sure about certain things. So you do dollar cost averaging when you're not too sure about certain things. But when you are very sure, you don't have to dollar cost averaging, you can just go all in. So if you're not sure, do the dollar cost averaging. I mean, take half the profits and stuff like that. Okay, let's look at this. Archus Mineral, um, down 22%, no full year guidance given, year over year 27. Okay, let's look at the graph. 12 to 21. So it looks like it's going up. What is this? Let's have a look. For the period, expect to remove 21 royalty mineral. Oh, okay. So it looks like a buy. Artus Minerals. It went up quite a lot. Q2 to Q3. It would be nice to have a full year guidance, but it's okay. Year over Q2 to Q3, I have 66.9. Provided earning guidance for the third quarter. Expect to report revenue around 21.2. 15, 21, 16, 13.6, 15, 12. Okay, I see. Yeah, if it is more than 30% growth, 16 point like that, during extreme fear time when it deep down to our support line, buying them is okay. Okay, buying them is okay. So you understand what the company does. Aetius Mineral is probably doing minerals things. So if there's no deal with China, a lot of mineral stock is gonna go up big time. Because the US want to buy the minerals so much because we are going into the world right now where we need so many chips, we need so many like magnets, etc. So extreme fears time buying them is good. Let's look at these prologies. Seems like a big change in revised guidance, but going back to April guidance, do nothing near the oscillation. So let's have a look. So 3.4, so it's an up. Okay. So very, very good. Okay, very good. Anyone else has done yours? Let me know. Let's have a look on that. Okay, let's go to ourselves now, one by one, to market screener. Anyone who still don't know how to go to market screener, this is your chance. So if you leave early and you never know how to do market screener, how are you gonna do market screener? How are you gonna get good at this? But anyway, let's have a look. Go to guidance, go to profit warnings, because I still think it's gonna like that till the end of the month, okay? So Quest, Genuine Parts, General Motor, earnings, Duolingo, daily active base 4 below expectation. Okay, let's have a look on Duolingo. Duolingo says the room for company shares to rise over the next 12 months on several factors, include building contribution from English language learners, app stores changes, EBITDA growth improving. Okay. So they are still expecting around how many? They expect around 25% growth. Okay. 25% growth. We kind of want 30% growth. Okay. So maybe out of £100, we probably put £50 on this when doing exchange fear time. Yeah. So we kind of want 30% growth. That's kind of what we want to be in our babies. They still think the market is gonna go up, rise over the next 12 months on several factors. Wow, this is it's a very, very proud thing to say as for the company. Okay, actually, sorry, not the company, it's actually UBS. Analysts say that. Analyst says that we don't really care about that. Okay, we don't really care what the analyst says. We want the company says. Okay, that's kind of what happened. Let's look at the next one. Let's have a look. Awesome. Let's go to the next one. So the way to do earning guidance is just going through one by one like that. Let's see. Can we short this? Full year expect 10. Previous was 10. So it's the same, so we can't do that. Genuine parts, let's have a look on that. For the growth, expect 3 to 4. Previous is 1 to 3. So this is going up. We want profit warnings. Why is it giving me up? That's fine. General motto, let's have a look. We do it with one of our students just now. This is 7.7. It's the same. Both is the same. Can you see we do it very fast? Duolingo lowers guidance. Let's see if we can short this. Profit warning lowers. Net sales to grow. Profit might lag behind. Decrease 25%. So they didn't say anything. Realtor lowers sales. Let's do that. So we have to go through the companies manually. Okay. Route. Let's have a look on that. Remain strong. Net sales will be lower than previously. How much lower? Net sales expected 1722. Previous was 19022. A little bit drop. A little bit drop. Okay? Not a big drop. Remain strong. Net sales will be lower. Will be nice to know what's the reason, but a little bit. Route. Let's look at this. Black backlog. Backlog, we don't really care. Okay? Backlog, that means the orders is still there. Demand is still there. It's just backlog only. Let's look at this. Because backlog is like the whole, usually it's the whole sectors. Australia bad. Okay, let's have a look. Won sharp drop due to impairment change. New Zealand sending its shares. Expect 9. Last year was 45. Wow, 14 to 45. Okay, let's look at the reason, yeah? Impairment charge tied to its New Zealand business. So impairment charge is like a cost. Cost is kind of okay. It'll be nice is because of the demand of the people. Okay. So I'm not worried about this too much. This, let's have a look. This is the Japan share. I don't like to do Japan share for guidance. Frankfurt, plunge share, slower recovery. They didn't give the numbers. To reduce its annual targets. If you go to the companies, you will know that we were weaker. Analysts combine lower market profit warning, a turnaround for profitability is anticipated. McDowell is a company remain optimistic. The third quarter was a negative impacted by volume shift. However, only have a limited impact. Aside from a negative impact, we are on track. Okay, a little bit down, but they are still quite okay. Let's look at this October 17, BMW. There's not much of companies reducing their earnings actually. Last week was all the way to 14, so we can go all the way to 14. That's good. Let's look at these. I'm gonna open all of these. Just we're trying to look for the big one, okay? The one that's kind of like you sound like it never happened before. It's like more than 10%. That's about that. We just click on all of that. Last week was October 14, isn't it? So we go all the way to 14. This is Michelin. Okay, let's have a look. Updated for the year, down 0.5. Is down, it's too small. Looking for the big one. This is Japanese. I'm gonna skip that. This is Germany, buy and hold. What is this? Sharp reduced price target. Lower is IBITA forecast for the year through 2027. Investment. Okay, this is investment bank. So this is an analyst talking about it. So it's not the company itself. Dominant, reduce outlook to what to what? Estimate lower than. We kind of need to know the numbers. They didn't give us a number. The numbers, we're gonna get it from the website itself. This is what? Wine. Wine. People who like to dream. Suspend growth share buyback. Mm, Treasury is facing a little bit of situation. China fallen out. Government drive to squash excessive spending. The sales will be low if trend continue. We cannot control, but confident it will grow slower level. We are doing our best. Question. We need the numbers though. There's no, there's no numbers. Okay. There's no numbers. So the reason is because of China. If China is a reason, then it's okay. Yeah, China's reason is quite okay, I think. That's good. And it's PLC, the previous 2033. So now it's 28, previous 20. Okay, let's read. With 80% revenue already covered by existing customer contract. Previous was 33. So I minus 5 divided by 25. There's a big percentage there. Let's have a look. NCCA on the 16th. Some people would have already showed this on the 16th. Let's have a look. NCCA PLC. Let's look at the 16th. When is that? This is 16. It's around there. It's like a share that is doesn't even exist. It's too weak. Look, it's like 0%. Maybe it's too small. Let's go to the next one. Commercial bank share. We need to know the guidance. There's no guidance here. Research is a situation with analyst. We don't really look at analysts so much, especially when it comes to buy and sell. Sales are weaker than low than last year. How much weaker though? What country is this? Norway. That's what this 16. Can't find them. Um, this is Japanese company, BMW EPS car. Okay, let's get this. Following warnings ahead, we have revises its forecast downwards. Guides 5 to 6 previously were 5 to 7. 5 to 6 midpoint. We now forecast around 10, representing -5 year on year. 7.2 previous 7.6. BMW expect 5 to 10. We adjust assumption. -9. Previous was -6. Looking ahead. Margin 6. A little bit of China situation. Revised implies lower 8.1. So everything was down. It's not down massively, but everything was down. Some people would have warnings ahead of Q3 result. It's not down more than 10%. It's like a very tiny, tiny, tiny bit for everything. Yeah. BMW, let's have a look. BMW, very tiny bit. It would be nice to down like more than 10%. A lot of their downs is quite small. Yeah. So let's look at of European stocks like that. Okay. Yeah, very tiny bit if you look at it. Five to from six, five to five, very small bits. Going to be more than 10%. QT Group, lower guidance estimate. Previous outlook estimate to be increased by 10. Net food sale. Sales will not increase. New outlook will increase 3 to 10. So this is also increase. Barcode. So there's not a lot of shorting going on. Retail under profit. Alpha lowest EPS BMW. It's for BMW. Okay, we done that. Root. Okay, awesome. So that's kind of what happened. Um, the earnings season actually come Tuesday, which is like starting this week. There's some earnings seasons going on right now. We just have Netflix coming in right now. Let's get how Netflix is going. Down 5 to 6% now. Let's click Netflix a little bit. Do. Report earnings, misview, Brazilian taxes, revenue, operating, misses quarterly, incurred expenses, tax dispute in Brazil. Just a bit of tax thing going on. Picks, Hasbro, high prices. Okay, let's look at this. Um, Operating margin because they pay a little bit of the tax to Brazil. Absent of this expense, we will exceeded our third quarter operating margin. We don't expect this to have a material impact on our result in the future. It's just a one-time thing. Growth, all of that recently underperformed the market. We, entertainment expect 45 compared to previous 44. A small increase of their revenue. Okay. Expect revenue, a small increase of the revenue, almost non-increase. Okay. If you want the market to crash, you want things to come down. The outlook. Revenue rising 7 to 7. Okay, that's okay. A small kind of increase of the revenue. Okay. This is not a share that we will buy during extreme fear time. We will not buy Netflix during extreme fear just because the increase is not more than 30%. Yeah. Cool. Let's see what else we have for right now. News. Let's go news. Go to world. Let's go to United. Go to guidance. Go to guidance a little bit. Let's go to one by one a little bit. Intuitive surgery, team viewer, updates. This is smart ease, revenue, Netflix. We just seen that. Construction, Manhattan, Mattel, Waste Connection, no change. So we don't look at them. Provides Texas Instrument. Let's look. Agree, guidance raise, energy services, producer, net income, we done that. Intuitive, Texas Instrument, Waste Connection, Penny, Bridgewater, CFD, insurance, chop nearly 21 on strong underwriting income. Wow. This is an insurance company. National, Manhattan, misses, Martel misses on weak business. Let's look at this. We're going to look guidance, yeah? Looking for guidance. Barbell, Mattel. Only one of dropping their guidance. Reaffirm. Some people do new Trojan. Pentair. Pentair. Yep, that's about Adidas raises their full year guidance. Let's get Adidas a little bit because it can be very similar to Nike. General Motor also raises their full year guidance. Okay. Volkswagen to cut production due to chip shortage. Coca-Cola. Okay, let's look. So this is Volkswagen. Government to prevent transfer of key. Largest supplier of basic semiconductor. Being on the blacklist. Okay, for security reason. Okay, so they are just not giving their chips to China. I think Adidas raises full year profitability from um up 1.7 previously was 2, so it's a little bit up on their profit. 3 divided by 2 is like how much? 3 divided by 1.7, so 3 divided by 1.7. So we need to do the guidance on this guy to see if we can buy this. If we can buy Adidas, that means we can also buy Nike. Okay. And it also has to do with Lululemon. You just have to see which increase the most in terms of their growth. Pentair, this is what? 3 up 6.8. That's that's a bit low. Barbell. Outlook, it reiterate is the same, so we don't look at them. Texas Instrument. They didn't give the numbers, so we have to do it manually as well. Team Viewer. Barbell, we done it. Okay. So not a lot of companies are giving you a lot of shorting, which is fine. I think next year you're gonna have more because companies just started to release their earnings recently as well. How come we didn't see the banks? Yeah, it's weird. Uh, regional bank. Um, let's see, what's the bank that has problem the other day? Which is what bank is that? Xeon Bank, more Bangkok, which is what we look at just now. Bangkok. How come it's not on our market screen? I was just wondering. Companies, all news. So, Bangkok beat 3 share up, loans slightly increasing, third release, all of that. Loans balances slightly moderate increasing. I think that happened quite before. Yeah, we didn't really see these banks. October 16. It's not on the guidance. Oh, it's actually not on the guidance. Yeah, this is like a news. It's not really on the guidance. This is a news thing. So when we look at the guidance, it's not actually showing that because it's more of like a fraud and stuff like that. It's not really the guidance. Okay. It's just a usual news. But you can't do anything with this anyway because the stock has been going up since, so hence it's not on the guidance. The guidance has nothing to do with anything. Let's have a look. Uh, Profit rise. Yeah, there's no guidance going on. 20th of October, they all become normal. Beyond. So if I show you Xeon, which is what happened, um, just on that one day, this on Friday, there's like a small kind of drop just when they realize that there are some fraud going on, and then it just like it's very small. This is not appear on market screen, which is not supposed to appear because you know there there's no future thing going on. It's not to say that the future is gonna go down and stuff like that. Yeah, normally banks, the government will come in to rescue them as well. So it's not a big deal. Okay, cool, awesome. As you said, we're gonna stay on target. Remember, the market is right now at it's the same as where we were many years ago. It's exactly the same situation. We are just on here. Right now, the market is exactly the same as where we were last week. Last week were around, yeah, last week was around here. Now it's around there. It's very similar situation. Let's look at big crypto. Crypto was around, yeah, very similar. So all red at the moment. Yep, so it's just a matter of time. So just be really patient and yeah, when the time comes, if you haven't already, as I say, I recommend to put 10% of your funds or 10 to 1% of your funds just at the bottom of the line, 1st of September there, just so that you can get ready a little bit. Yeah. So hopefully there's some deep down here till the end of October time. Okay. So because what happened here is that a lot of these deep down they happen so quickly, so that it happens like crazy. It happens so quickly. So pending orders is like if you're pending orders is that's where you will catch it 6 o'clock and then it's just like that. And then it happens quite quickly there. This is 9 o'clock when the market close. So this one you can't really catch because this is when the market kind of close. So yeah, so do a pending order, as you said, just on the 1st of September time to do a little bit just to get ready. But the big money is gonna come is where our VIX come to the top and our put and call ratio. Let's have a put and call ratio. I don't think the put and call ratio has done anything. I think it's still the same. Let's have a look on the fear and greed a little bit for a second. So on that. Yep, just like that. Because on the 1st of November as well, we're gonna know the Chinese tariffs there as well. So with our put and call spike up a little bit. It would be nice if it spike out a little bit on the top there. A little bit just there. That's kind of where we want 0.8. Now it's around 0.7 a little bit. So wait for it to come back a little bit higher there. That's what we can do. Yeah. So that's kind of what happened. Awesome, everyone. I'm actually in the States right now and in um kind of like Phoenix and stuff. We're gonna go to Washington next week as well. Next week, Tuesday is gonna be a bit tricky because we're gonna see Jensen's as well. So for next week, probably what we're gonna do for next Tuesday. Probably gonna send you a link. Yeah, the recorded one. Okay, cool. I will let you know. Let me see who is here. Just so I remember who is here, so I probably can remind you a little bit to see kind of what happened. Probably early or stuff. So, yep, good. That's all we have for today. Thank you, Ajay, Alvin. We have Amin, we have Barry, we have Annabelle Nice, we have Bobby, we have David, Avilin, Harriet, Ionot, Javil, Jack, Janos, Jenna, Jennifer, Kim, Laura, Marian, May, Marian, We have Paddy, long time Paddy. What happened? Paddy, when you gonna send me a text? We have Patrick. Nice, Patrick. We have Rohima, Sansuki, Teopolina. Awesome. Really good to see. A lot of you here. Um, you're welcome, Jenna saying thank you. Rohima saying thank you. Jennifer saying thanks. Paddy saying thanks. Awesome. Please don't disappear. I'll be there. You're welcome. Uh, you can mind quickly. Awesome. Really nice to see you guys. Um, see you guys. See you guys. I need to look at my schedule. See you guys next week. Yeah, probably gonna do a probably a recording on my Instagram on to let you know what happened Tuesday next week. Yeah, I'll let you know on my Instagram story to see what happened. Probably gonna record a thing going on. Okay. Awesome, everyone. Literally just on that day. He literally just on that day. That's where we're gonna see him. This is crazy. Normally we can move things around. Awesome. Cool. See you guys soon. Take care now. Bye bye. You're welcome, King. You're welcome, David. Long time no see. Where have you been, David? Jack. Thank you for sharing me your situation. Hope you are doing it well, though. I know you will. Happy Diwali, big time, guys, for our beautiful students. Momo is nice. What's Momo? Get book one next couple of weeks. Get the feel closer. Awesome. Happy Diwali. Thanks, David and Theo. Long time. Wow, guys, we just finished a session right now. Um,